Hello students, hope you all are doing great. I'm Achal Chaudhary working as an assistant professor, BBA department in St. Andrews Institute of Technology and Management. So students, I'm back with my online lecture series of company accounts. So students, it's your lecture number 1 from unit 1 and your unit 1 includes accounting for share capital transaction, alteration of share capital, buyback of shares, acquisition of business and profit prior to incorporation. And today we are going to start with the understanding of shares and procedure of issuing shares in a capital company, issue of shares under subscribed share, oversubscription, calls in error, calls in advance, and your journal entries. So we will cover only theory portion today. We will solve the numericals from related topic in our next videos. And also in between the videos, whenever I feel like that this particular portion is important for you according to your like in respect of your university exam, then I will let you know about that particular topic, and also we will solve the numerical for each and every topic so that you are able to understand the concept regarding the theory, whether it is theory or numerical, so that will help you. So let's start with today's lecture. First of all, let's understand about the share. What is share? So basically, it's a share in the share capital of a company and it includes stock. The share capital of a company is divided into units of smaller denominations. Each such unit is called as a share. So basically, students, whenever a company is they are having some share capital, and when they are dividing that particular share capital into further divisions, into subparts, so those subparts are known as the shares, which carries a particular value of the share capital. It includes the percentage, a specific percentage of your company's share capital. Basically, it's an exchangeable price of a value of a company which can fluctuate up or down depending on several different market factors. So what happens that in every organization you must have seen that कि share capital जो required होती है, जो हम लोग share capital लगाते हैं, that is too large, right? So what we do, that is not like easy enough for a company, for a person to handle or to bear that particular amount by themselves only. Like suppose if a company's share capital is 2 crore, so 2 crore सिर्फ एक particular person लगाए, so that is also not possible. What they do, they just divide that share capital into small parts, that is your shares. शेयर्स में जब अपनी शेयर कैपिटल को हम डिवाइड कर देते हैं, फिर उसके बाद हम क्या कहते हैं, वो हम पब्लिकली इशू करते हैं, पब्लिकली ऑफर करते हैं टू अ नॉर्मल जनरल पब्लिक. वो हमारी कंपनी में इन्वेस्टमेंट करते हैं, दैट इज नोन एज योर इन्वेस्टमेंट और परचेजिंग ऑफ दी शेयर्स. सो वो शेयर होल्डर बन जाते हैं एंड दे आर ऑल्सो, फिर उसके सपोज यहाँ पे एक चीज समझ लीजिए कि if a person is investing in your organization, then what's the benefit of that investment? So first thing is कि अगर कोई investment कर रहा है, if a person is becoming a shareholder in your company, then he is also liable to some you can say authorities. He is liable to take decisions, he is liable to involve in such decisions which are necessary, which are like you can say very important for the company. So हम लोग क्या करते हैं, we just throw the share capital into the market, we divide our share capital or shares into the market. उससे फिर क्या होता है कि कंपनी को पैसा मिल जाता है और शेयर होल्डर्स को कंपनी में कुछ राइट मिल जाता है. सपोज अ पर्सन हैज परचेज्ड 10% shares of a company, so that also means that he is the owner of 10% of that company. He is 10% owner of that particular organization for which he is holding the shares. So this is your share. Next is types of share capital. So basically your share capital is divided into two parts. First is your equity share capital and second is preference share capital. So equity shares are also known as the ordinary shares. So they are the form of fractional, or you can say a part of ownership in which the shareholder is as a work as a fractional owner, and they takes the maximum business risk. They are involved in the maximum business risk, and they are also the owner of the company. The holder of equity shares are members of the company. They are also considered as the member of the company and have their voting rights. As I have already told you, like shareholders also have some voting rights in respect of their holdings. So equity shares are the vital source of raising long-term capital. So it also represents the ownership of the company and capital raised by the issue of such shares. So let's understand about equity shares. So equity share capital is the one which involves the maximum business risk because it is not, you can say, accompanied by your fixed rate of dividend. It involves risk, but yeah, there is some certain advantages also, like they have a voting right. They are also known as the members of the company. They have the power to take decisions in respect, and also they are involved in the decision making process in the organization. So they are also known as the, you can say, secondary owner of the organization. Next is your preference share capital. Preference shares are the shares which promise the holder of a fixed dividend whose payment takes priority over that of a ordinary share dividends. So what happens to preference share capital holder? Like they are promised for a certain fixed dividend amount, and the capital raised by the issue of preference shares is your preference share capital. So what happens is, student, कि whenever we are considering the preference shareholder, many of the shareholders doesn't prefer the business risk. They don't want to go for certain risk. So though then in that case what they do, they just prefer the preference shareholder because they will get a prefer, you can say, a fixed amount of dividend every year, and they also feel safe while investing the amount in the organization because they know at the time of winding up they will get the preference while they are collecting the share capital amount. So these are the preferred share person shareholder who get the preference over the equity share capital holders. Procedure of issuing shares in a company. So first we have to do is we have to issue a prospectus. Prospectus basically it's a document used by a public company as an open invitation to the public to buy the shares of a company. So basically when you are inviting the public to invest in your organization, to invest in your shares, then the document which carries the important detail of your organization and the invitation, that is known as your prospectus. So first of all what you have to do is you have to issue a prospectus for your further issuing of shares. Next is your application of shares. After getting an invitation, interested investors prospectus can submit their application through a prescribed form along with an application fees before the closing date given in the prospectus. So आपने कहीं भी suppose you are going to take the you can say admission in a school or in a college, right? So what you do, first of all, you just go through the prospectus of the college of the school, right? You get go through with the all the information. Then what you do, you just fill out the form which is known as your application form with some certain amount of money. So same happens with your organization also when they are asking for these shares, when they are offering these shares to the public, so they offer that through a prospectus, then they receive the applications like how many shares the a person requires, and also along with the a particular application money, because it is being fixed by a particular organization. Because application money क्या होता है कि application money confirms that you are interested in the shares of a particular organization and you are going to purchase those shares. बिकॉज अदरवाइज क्या होगा कि आप तो एज्यूम करके बैठ जाओगे कि हाँ मेरे पास तो इतना एप्लीकेशन मनी आया है, सॉरी एप्लीकेशंस रिसीव हुई हैं बट मनी नहीं आया, राइट. सो यू आर एज्यूमिंग कि आई एम यू आर आई हैव रिसीव्ड 10,000 एप्लीकेशंस, सो दैट मीन्स कि मेरे 10,000 के 10,000 शेयर्स मार्केट में चले जाएंगे. सो सेकेंड डे क्या होता है कि आपको पता चलता है कि आपके तो शेयर्स 10,000 के आपके तो 100 शेयर्स भी सोल्ड नहीं हुए, किसी ने एप्लीकेशन मनी सेंड ही नहीं किया, नो बडी इज इंटरेस्टेड, वो बस एक काइंड ऑफ स्कैम था या जो भी था, वॉट एवर इट इज, बट नो बडी इज इंटरेस्टेड. फॉर दैट पर्पज, टू इंश्योर दैट अ पर्टिकुलर person is going to invest in your organization, so it's a first initial stage. If they are interested, then for sure they are going to pay a application amount. So first thing is to give the application amount to ensure that we are interested in your organization shares and we are going to purchase them. Next is allotment of shares. When the directors of an issuing company, with consultation with the stock market authorities, prepare to sell shares to an applicant, they communicate through an allotment letter. So after receiving the application, what you do, you just confirms like all the information, all the things has been fulfilled by the shareholders or not. Then after that, what you do, you just allot them shares according to their preference. Suppose if our organization is having a certain limit of shares is 10,000 only, and he have received, a company have received the application for 20,000 shares, then it is not possible at all to allot 20,000 shares. So now in allotment, what a company does is, company fulfills the requirements according to their you can say budget, or you can say according to their capability. अगर 10,000 शेयर्स ही इशू कर सकती है कंपनी, तो वो 10,000 ही अलॉट करेगी, राइट. सो 10,000 को अलॉटमेंट बोला जाएगा, क्योंकि यहाँ पे क्या कर रही है, they are just matching the criteria of the you can say investors, and they are also matching it with your you can say capabilities, whether you are able to give those amount of shares or not. So this is your allotment of shares. And last is call on shares. Calls are used to collect remaining shares after application and allotment as per the provisions of the prospectus. So calls can be like first call, second call, and so on. These are the your calls. Then you ask for the remaining amount of the shares. You call them and you just send them a reminder for the fulfill payment of the remaining amount of the shares. So it can be with calls can be divided into two parts, three parts, or it can be like you can say only one call only. So which will conclude all over the amount of the shares. So it has been already decided in the prospectus, it has been already mentioned in your prospectus before issuing the shares that we will have a two calls in for this particular shares, and that call, the time period for those calls will be 3 months or 6 months. So everything has been already decided, has been already given to you in advance before issuing of the shares, so that nobody will feel like कि अचानक से कॉल मांग रहे हैं या फिर अचानक से they are demanding for the money. So the things are not like that. Whenever the organization is going to issue a prospectus, then in that process each and everything, each and every detail has been mentioned for the smooth functioning of the your process of the issuing of shares. So in your call on shares, the remaining amount of the shares is being collected. So this is a chart which depicts the issue of shares. So issue of shares can be done in two types, like for cash you are doing, or whenever you are not issuing these shares, whenever you are issuing these shares other than cash, or you can say for consideration other than cash, like you are taking the assets in respect of these shares, एक तरफ आप shares allot कर रहे हैं, secondly you are taking the assets in comparison to that shares. So in case of cash there are three further divisions. First is at par. Issue of shares are issued at the par, like whatever the amount face value they are having, so you are issuing them on the same face value. And whenever you are asking for extra money, when you are adding some premium on those shares, on the issuing of those shares, that it is known as that you have issued these shares at a premium. And when you are issuing some shares on a discount, like 1 rupees discount or 2 rupees discount, you are giving certain amount of discount on a particular shares, on the issue of those shares, then it is known as that issue of shares has been done at a discount. In case of consideration other than cash, it can be further divided into like issue of shares to vendors, whenever you are issuing the shares to the vendors, or you can also issue the shares to the promoters in respect of some particular consideration which is other than the cash. So, students, let us cover some few terms which will be beneficial for you to understand the concept of shares, and also these will be helpful for you to understand to solve your numerical portion. So, first is your undersubscribed. So, undersubscription of shares means what? See, whenever the organization, suppose let's take the example here, if an organization can issue 10,000 shares, they are liable to issue 10,000 shares, and they have issued the prospectus for the same, but they have received only 8,000 shares application from the public. So it's a situation of under subscription कि आपके 2000 shares without subscription रह जाएंगे, आपके 2000 shares को nobody is going to subscribe, nobody is going to purchase. So that is your under subscription. If the issue is under subscribed, it may be assumed that minimum subscription has been received and the shares are allotted to all the applicants in full. So whenever there is a situation of under subscription, what you do, you just give allot the all of the shares which has been demanded by the public, because under subscription की situation है there, here you don't have to analyze कि किसको कितना shares देना है. There is a simple सी situation है that जितना आपको shares की application receive हुई है, you are just fulfilling their you can say requirement, you are just allotting them the applicants which they have been applied for, you are allotting them in full. So here the whatever the journal entry you are going to pass, please make sure students, more many students make the mistake in this concept. Whenever they are going to pass the journal entry, what they do is they just mention the amount with respect to 10,000 shares, but what you have to do here is you have to mention by 8,000 shares only, क्योंकि जितना डिमांड हुआ है, जितना आप किसी शेयर होल्डर को दे रहे हो, जितना रिक्वायरमेंट है, जितना अप्लाइड है, जितना अलॉटेड हो रहा है, आप उतना ही तो शेयर्स को मेंशन करोगे, उतना ही अमाउंट मेंशन करोगे. यू कांट मेंशन 10,000 शेयर्स, बिकॉज 10,000 फिर रिमेनिंग 2,000 आप किसको वो करोगे. अगर suppose you are mentioning 10,000 shares, you are passing your journal entry with your 10,000 shares. Now at the time of allotment money, at the time of you can say first and second call money, so आप किससे पैसा collect करोगे? Nobody, right? So what will happen, it will hamper your accounts also, कि आपके पास पैसा नहीं है, आपको कोई पैसा receive नहीं होना है, still you are passing the journal entry for that particular thing. So it's not good. What you have to do is you have to pass the journal entry on the basis of the application of shares. Whatever the amount or number of shares has been applied by the public and has been allotted to them, you have to pass on the journal entry on that basis only. Next is a situation of oversubscription. Oversubscribe means what? A company is having 10,000 shares, right? But the company have received the application for 15,000 shares. So now what will happen? You can only give them 10,000 shares only, because you are having 10,000 only. If a person is having 10,000 rupees in their hand only, so how can you demand for 15,000? Where there like वो कहाँ से अपना 15,000 remaining 5,000 वो कहाँ से arrange करेंगे? That's it's not possible, right? So what happens that over in the case of oversubscription, you can give only up to the maximum certain limit which is a company is capable for. Like if a company can is authorized for 10,000 shares only, then he will only issue 10,000 shares. The company can allot only 10,000 shares. It can't exceed their shares, number of shares. So there are three alternatives to solve the problem of oversubscription. First is you can reject the excess applications, like suppose you have received 15,000 shares. So what you will do, you will reject the 5,000 share application amount. आप 5,000 जो भी आपकी एक्सेस में आपको रिसीव हुई हैं एप्लीकेशंस, you will refund their amount. Next is you have another alternative, that is proportionately allotment of shares. Like a person who have applied for 7,500 shares, you can allot them 5,000 shares. In the same case, the other cases like who have applied for 10,000 shares, you can give them 7,500 shares. So likewise you have to allot these shares in their proportionate, whatever the requirement you have received, whatever the class they belongs from. So what you have to do is you have to proportionately allot the shares to each and every you can say shareholder. Next is third alternative. It's a combination of both the above alternatives, like some of the application money you are just rejecting them, like out of 15,000, 2,500 you are rejecting the application of 2,500, and the remaining 2,500 applications you are just adjusting them on the basis of their proportion. Next is calls in error. It is the amount called by the company on allotment or on calls but not paid by the shareholders. When a company calls for an unpaid amount of the shares it has issued and an investor fails to pay the amount fully or partially, then it is your calls in error. So whenever the organization is demanding for your further payments of these shares, so what you do is you are not capable, maybe you are not capable to pay the amount, or you are not paying the amount due to any reason. So that will be considered as your calls in error, because you are not paying the amount in the certain time period which has been given to you to pay that particular amount. So calls in arrears equals to called up capital which a company has been already called up from you, deduct from the paid up capital the amount which you have been already paid up to the organization. So this will be your called in error. Next is calls in advance. As the word describes itself, it's a advance payment of the you can say of the amount which you are going to pay the organization, right? Whatever the amount has been called up, you are paying that, along with you are paying some certain amount which has not been yet called up from the organization. So that is your calls in advance. So it's a excess amount which a organization has not been asked till now to you to pay such amount. Maybe you will be busy in like certain months or certain years. So what you do, you just pay the amount in advance so that your you can say your shares will not be forfeited further. So for that purpose, to skip that forfeiture, what a person does is they just pays the amount to the organization in advance to complete their responsibility, to fulfill all the requirements of the organization and for the smooth flow of the issuing of shares. So this is your calls in advance. So students, here are the journal entries for the issue of shares. Please have a look on them and try to understand all the journal entries which I am going to share with you. First is for receiving application money. Whenever you have received some application money, then your journal entry will be bank account debit to equity or preference shares application account. Next is on the allotment for transferring application money to the share capital account. Whenever you are transferring the application money to the share capital account, the journal entry will be equity preference share application account debit to equity preference share capital account. So this will be your transferring entry. So students, before moving ahead, let me tell you that the share, you can say issue of shares, the journal entry will remain same in each and every situation, but the only difference will come in your calculation part, calculation of the amount of each call, allotment or application amount. So please understand the you can say journal entries and go through these journal entries because these will remain same in all these situations. On allotment, for making due allotment money, when your allotment money is due, in that case share allotment account debit to share capital account. When you have received the allotment money, for receiving allotment money, in that case bank account will be debited to equity or preference share allotment account. For making due call money, when your call money is due, share first, second or final call account debit to share capital account. And when you have received the call money, whatever the amount you have received in respect of that particular call, then bank account debit to equity or preference share first call, second call or final call account. So students, that's it for today's lecture. In next video, we will continue your basic concepts only. First of all, we will cover all the theory portion of the shares and issue of shares. Then we will move ahead towards the numerical portion. So here are the questions based on today's lecture, and these questions has been asked in your university exams. Explain the concepts like call in advance and calls in arrears. So you have to solve this question, and it has been like one of the important question for you to understand the concept as well and for your university exams also. And next question is what is share? So it has been already asked in your university exam in your short type of answer. So you have to solve both of these two questions. Thank you so much for your time. Stay tuned for more videos.